Hello. Hang on, library. Hello and welcome to the Flipping and Wholesaling Houses in New York show. I am Michael Pinter, where I teach you how to start flipping or wholesaling houses in New York, or if you're already doing, how to grow your business. Did I not turn that light on in the back there? I'm gonna get that light on. I don't like the way that looks. I don't know. Usually turn that on first thing. Okay. So I had a question today about how to file taxes as a real estate wholesaler. So first of all, I am not an accountant. I am not a lawyer. So do not take this as accounting advice or legal advice. You should absolutely consult with a professional about those things. I use professional attorneys and accountants for anything important. But the truth is, as a real estate wholesaler, if you're just wholesaling, all your income is ordinary income, and it's going to be completely taxed. And it's a little bit of a pain in the ass because you usually forget, if you don't set aside an account for taxes, you get slammed at the end of the year because you took all this money and you spent it on marketing or you spent it on your own personal expenses, and it's a problem, right? So one of the things you absolutely should do is open a separate account, and when you finish a wholesale deal, you should put, I would say, between 20 and 30% of your profits into a tax account. And if you put too much in, then that's free money at the end of the year. But you don't really get a lot of the benefits as a real estate wholesaler that you do for people that own rental properties, right? When you own rental properties, you you are able to depreciate the asset. That's a big deal. There's also a lot of bonus depreciation and cost segregation that's done today, where you really can almost pay no taxes. And if you're doing long-term flipping on bigger projects, then you get the advantage of the property being a long-term capital gain, which means if you own a property over a year while you're doing work on it before or while you sell it, then it's taxed at a much lower rate. But for wholesaling, where it's quick turn, it's ordinary income. So you really file taxes as ordinary income. Now the advantage is that all of your expenses, so anything you spent on marketing, anything you legitimately spent to get the property. So I'm driving around all day going on seller appointments. So for me, I have a lot of auto expenses, so gas and car payments and things like that. Again, ask your local professional for advice on how to do this. But a lot of the expenses that I incur are obviously reduced from my income for the year. But you don't have a lot of the advantages, again, of rental properties or long-term income. So you file taxes as an ordinary, usually Schedule C. I have an overarching LLC that I do most of my wholesaling in. If I close on properties, and I do close on a lot of properties, I usually will create an LLC just for that property. The reason why I do that is to limit liability. So that is the definition of a limited liability company. An LLC stands for limited liability company. You do that to limit your liability. So the most obvious way you limit your liability is if every property is in a separate LLC, then if you get sued for something and it's a major lawsuit, right? You don't care if you get sued for something tiny, but because you probably will settle for nothing. But if you get sued for something major, somebody trips in front of your property and breaks their neck and is paralyzed, God forbid. So that could be a huge suit against you if you really did something negligent. By the way, usually if you're not doing something incredibly negligent, you're not going to get a huge suit against you. But there is always that million percent chance of risk, one in a million chance. So if you have a limited liability company, you are limited to whatever that LLC holds. So if I have 12 different properties that I'm holding, and each one's in a separate LLC, and one LLC gets sued, they cannot attach the other properties. That's the most obvious reasons why you file an LLC. Also, because you want to prevent it from coming back to you personally, right? So the entity, this LLC, is getting sued because they owned a property. They can't sue you personally because it's only the entity. So again, those are the most obvious reasons. Let me give you another reason that I discovered firsthand, which was fantastic, and that is I sold a property and got sued for something absurd. I think it was I don't even remember what I got sued for. And I was not in the wrong, and I was defending it. So I was paying legal fees to defend it. And I had sold the property. So the LLC had no assets. So eventually I woke up one morning, and I probably should have done this sooner, called my attorney. I said, listen, the LLC that they're suing has no assets in it, right? If we don't defend and they just get a summary judgment against us or a default judgment against us, are they going to be able to collect? And he said, no. Then I go, please stop defending, right? You don't need to defend anymore if they're suing an entity that has no assets. So that is a beautiful, beautiful thing. Really, I can't tell you what a weight was lifted off my shoulders realizing that. So I try to create a new entity every time I'm buying something. for that very reason, right? If anything bad happens while I own this property, and somebody decides to sue me, assuming I can sell the property, right? And most people, people would say, well, if you're in a lawsuit, then no one's going to buy the property. No one knows about pending litigation. Believe me. I recently had a suit where I was in contract on a property. There was a title issue. I had a big deposit, a six-figure deposit on it, and I decided that I wasn't going to buy the property because of this title issue. The guy wouldn't give me my money back. And my attorney was like, oh, he'll never sell the property because people are going to do litigation search. Well, guess what? Nobody does a litigation search. He sold the property for a lot less than I was in contract for, which sort of made me happy. And I ended up getting my whole deposit back because the judge found in my favor for default judgment or summary judgment that the guy really did not disclose something on title. There was a crazy easement on it, scenic easement or something like that. Is in East Hampton, and I got all my money back, which was great. But my point is, no one does a litigation search. No one. So if you have litigation against you and you can sell the property, you can pretty much stop fighting at that point, and you can just tell the other side, do your worst because you're going to get a judgment against the LLC that has zero assets. So that is an amazing thing. I can't tell you how liberating that is to know that if something shows up later, and some of these suits show up, a year or two later, they sue you for bullshit. Somebody slipped, fell, on a property that you sold, on an LLC that's got nothing in it, and you could basically tell them to go screw themselves, right? Guess what? Get a judgment. I'm not defending. I'm not paying a cent in legal fees. Sue the LLC. LLC has no assets. Good luck collecting. That is the most liberating thing you can ever tell somebody, and that is the reason why. Now, as for filing taxes, it's really the same kind of situation. You want to be able to keep every single deal in its own silos, so where you can keep track, right? Because it's, you think when you get into this business that this is going to be so simple. I'm just going to have marketing expenses and I'm going to buy a property. Very often there are additional costs, right? For me, sometimes I think I'm going to close on a property, so I'll create an LLC and then I won't create an LLC. Now, it's not an expensive proposition. It's $200 to create an LLC, but there are expenses involved. Or sometimes I've had deals where I'm wholesaling them, but I have to pay a tenant to leave in order to make the deal happen. I just have to pay two tenants $8,000 each to leave. Now, those are expenses, legitimate expenses. So you need to make sure that when you expense these things, you can keep track of what they are. The easiest way to do this, I find, is QuickBooks, where you can use class as a property address. I set up actually an address or location for every one of my QuickBook charges, and I'm using RE Simply. I'm doing the same thing. So anytime it's on a property that I am closing on, the expenses for that property are categories, which means that at the end of the year, I can simply run a report for each property, see how much I spent, how much I made, and that's a very easy way to give your account the numbers to file taxes. Remember now, filing taxes. So people get all crazy when I tell them that it's ordinary income, but it is ordinary income. And understand, people go, well, why is this short-term capital gains? Okay, there's no such thing as short-term capital gains. I want to get this out there. Again, I'm not an accountant, I'm not a lawyer, but there's only two ways that we're taxed, basically, for our purposes, and that is ordinary income or long-term capital gains. So if you own a property for 11 and a half months, it's the same as owning a property for 2 weeks. And if you own a property for a year and a day, and then you sell it, it's the same as owning the property for 10 years. Either way, it's either long-term capital gains, which gets taxed at a lower rate, depending on your tax bracket, or short-term capital gains, which is ordinary income. So don't be discouraged by this. Just be smart. Set up a tax account. This is from Profit First. I'm good. I like David Richter a lot. He has a great book that I just read. What's called Profit First for Real Estate Investing. It's great. So set up an account for taxes, and when you close the deal, put away some money for taxes so that you're not slammed when tax man comes in April. I hope this was helpful. If you're interested in all the ways I can help you, go to howtoflipnewyork.com. If you are interested in the course I have that teaches how to do what I do, go to howtoflipnewyorkcourse.com. If you're interested in finding out more about coaching, one-on-one coaching I offer, go to coaching.howtoflipnewyork.com. What else? Oh, if you're watching on YouTube, please subscribe. If you're watching on any channel, please click the thumbs up. The likes really help me. And what else? Oh, yeah, I go live 5 times a week. This was a good suggestion. I've covered it before, but I don't always know what to say. So please keep the comments coming. The question can be about anything. It doesn't have to be about the video you're watching. If it's a simple answer, I'll just reply with an answer. If it's something I've covered before, I'll send you a link or multiple links to a video or videos I've done on it. And if it's something new, then I'll do a new video on it. So please, please, please keep the comments coming. And thank you very much for watching. I really appreciate it.